Ford Motor just reported earnings for the third quarter and people are taking notice. What's going on at Ford, why their earnings fell short of Wall Street's forecasts, and what that could mean for the future of the firm are all topics we'll be discussing in great detail in this video. Did you know that a recent UAW strike played a significant role in these developments? Yes, you heard that right. Join us as we explore why their earnings missed Wall Street's expectations and discuss the potential implications for the company's future. Ford's earnings. Miss in an unexpected turn of events, Ford Motor Company's highly anticipated third-quarter results presentation left investors and industry analysts somewhat dissatisfied, as the statistics fell short of Wall Street's expectations. The automaker, which had been on track to reach its earnings projections, suffered an unanticipated setback that harmed its financial prospects. The United Auto Workers, UAW, union initiated a nearly 6-week labor strike, which posed an unexpected difficulty. The strike, which halted production at several of Ford's key manufacturing plants, had far-reaching consequences, which were clearly reflected in the company's financials. The UAW strike had far-reaching consequences, with Ford reporting a $1.3 billion loss as a result of the interruption created by the labor dispute. This significant financial failure shook the automotive sector, highlighting the fragile balance between labor relations and corporate profitability. The impact of the strike serves as a harsh reminder of the reliance between automakers and their workforce, as well as the potential for economic volatility in this industry. While the industry as a whole navigates these problems, Ford's management and investors must now devise a strategy to not only recover from this setback, but also to ensure long-term stability and development in an increasingly competitive and developing automotive sector. Impact of the UAW strike. The UAW strike, which resulted in a tentative deal, had far-reaching ramifications. It compelled Ford to withdraw previously published profit forecasts, which included significant adjusted earnings and cash flow projections. The walkout impacted Ford's manufacturing lines, resulting in delays and supply chain disruptions, which resulted in lower vehicle deliveries and sales. As a result, the automaker had to deal with the financial consequences of these disruptions, which necessitated a re-evaluation of their quarterly predictions. Management and investors at the corporation are now challenged with developing a strategy, not just to recover from this enormous setback, but also to assure long-term stability and growth in an increasingly competitive and shifting automotive industry. This event serves as a sharp reminder of automakers' reliance on their staff, stressing the possibility for economic volatility in this industry and the need for resilient measures in the face of labor disruptions. Financial details. Let's go into the details and examine the financial consequences of Ford's difficult third quarter. The company announced adjusted profits per share of 39 cents, falling short of the 45 cents predicted by industry analysts. This earnings miss surprised investors and sparked concerns about Ford's ability to navigate the changing automotive industry effectively. The nearly 6-week-long UAW strike played a significant impact in this profit shortfall, with production lines halting and supply chain delays caused by the labor conflict. The company's bottom line suffered, weakening previously stated profits forecasts. In addition to the UAW strike, continued cost and quality difficulties were a major contributor to Ford's earnings shortfall. The automobile business, which is always changing and becoming more competitive, expects precision and efficiency in both production processes and product quality. Any hiccups in these areas can have serious financial consequences. Ford, like many other automakers, has been dealing with manufacturing cost concerns, material shortages, and supply chain issues, all of which have resulted in cost overruns and delays. These quality and cost difficulties complicate Ford's current financial challenges, necessitating a strategic rethinking to fix these operational flaws while remaining competitive in a volatile market. What's next for Ford's EV business? Moving forward, Ford has a unique mix of problems with a special emphasis on their EV sector. While its regular operations continue to function well, their Model E EV unit has reported a significant loss in the most recent quarter. This unexpected setback has caused the corporation to reconsider its approach to the rapidly expanding electric vehicle sector. One important impact of the financial instability has been the postponement of around $12 billion in previously announced EV projects. This delay will undoubtedly have repercussions for Ford's future electric vehicle manufacturing, development, and overall competitiveness in the constantly evolving EV field. Given these developments, a critical issue arises. What is the next step for Ford's EV business, and how will they navigate the complex balance between production capacity and consumer demand in the electric car sector? As the world swings toward cleaner, more sustainable transportation options, the global automotive landscape is undergoing tremendous transformation. Ford, like its competitors, acknowledges the growing importance of electric vehicles and the necessity to assert a foothold in this rapidly changing industry. As a result, the corporation must plan a course that not only solves the financial issues within their EV sector, but also guarantees that they remain at the forefront of electric vehicle research and production, in order to fulfill rising consumer demand in a more competitive field. Another critical aspect: the growing importance of quality concerns inside Ford's operations has been highlighted in recent evaluations as a major issue. Ford has continually borne higher warranty and quality-related expenses than its industry competitors, suggesting the necessity for the corporation to address these challenges with urgency and effectiveness. The third quarter of the fiscal year saw an unnerving development, with over 50,000 automobiles placed on quality hold, a circumstance that had an undeniable financial impact. This circumstance serves as a clear reminder of the importance of resolving quality concerns quickly and efficiently, as they damage not only the company's financial health, but also its reputation and consumer trust. As a result, Ford must create a strategic course that not only addresses these quality-related issues, but also strengthens its position in an automotive landscape where excellent quality is essential. Nonetheless, there are rays of light for Ford among these quality issues. Their Ford Blue division, which is in charge of gasoline, diesel, and hybrid automobiles, is currently booming. It is generating significant money, which may be used to subsidize the company's move to electric vehicles. As the automotive industry transitions to electric mobility, Ford's ability to maintain a solid presence in their traditional vehicle market becomes increasingly important in guaranteeing a smooth transition into the realm of electric vehicles. While the transition to electric vehicles has been slower than expected, it is important to note that customer preferences are changing. Surprisingly, buyers appear to be gravitating toward hybrid automobiles, which provide a compromise between traditional internal combustion engines and fully electric vehicles. Hybrids not only make the move easier for consumers, but they also contribute to a 25% boost in efficiency and a 25% reduction in emissions. Ford has the challenge of matching its product range with growing consumer tastes while continuing to develop and invest in electric car technologies as it navigates this changing terrain. This shift in consumer desire raises the question of how Ford will harness the success of its Ford Blue segment to traverse the shifting automotive environment, embracing both the traditional and electric car sectors to ensure a sustainable and prosperous future. UAW deal's impact. While the latest UAW agreement is still in the works, it presents Ford with a hard financial conundrum to solve. If adopted by union members, this agreement is likely to increase labor expenses by $8 to $900 every vehicle manufactured. For a company like Ford, this means a significant increase in production costs, which has a direct impact on the bottom line. The question in this situation is how the corporation intends to navigate these additional expenses, uncover productivity improvements, establish operational efficiency, and apply cost savings across the organization. Ford must carefully combine the requirement for cost conservation with the pursuit of operational excellence and product quality in order to meet this challenge. The way forward may entail investments in automation and innovative manufacturing processes, rethinking supply chain tactics, and discovering possibilities to boost labor efficiency. Furthermore, Ford must examine the competitive situation in the automobile sector, as rising production costs may erode profit margins or lead to price hikes, affecting consumer demand and market share. Given these challenges, Ford must devise a comprehensive plan that not only mitigates the consequences of rising labor expenses, but also ensures the company's long-term profitability and competitiveness in a continuously changing industry. What are your thoughts on Ford's challenges and their efforts to overcome them? And how do you see this affecting the future of the automotive industry?